This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose 1.5% on Thursday, extending gains for a third day, on increasing concerns the U.S. may carry out a military attack on key Middle Eastern producer Iran that could disrupt supply from the region. Brent crude futures rose 94 cents, or 1.4%, to $69.34 a barrel by 0730 GMT. U.S. West Texas Intermediate crude climbed 92 cents, or 1.5%, to $64.13 a barrel. Both contracts have climbed about 5% since Monday and are at their highest since September 29.
Singapore onshore fuel oil stockpiles fell to their lowest in more than 8 months as imports slumped for the week, data showed on Thursday. Inventories slipped 14.7% from the previous week to 19.94 million barrels, about 3.14 million metric tons, in the week to January 28, down for a second consecutive week, data from Enterprise Singapore showed. Imports into onshore tanks declined 48% week-on-week to around 503,000 tons, the Enterprise data showed. Top origins for the imports included neighboring storage hub Malaysia, as well as arrivals from Estonia.
Moving on to the top news in the energy sector.
Russia's naphtha exports to Asia are set to fall in January, with volumes in storage swelling as U.S. sanctions pressure key buyers including Taiwan, India and Venezuela, forcing Moscow to seek new markets, traders and analysts said. Buyers have become more cautious after Washington imposed sanctions on top Russian oil producers, forcing sellers to hold naphtha on ships or in storage abroad from where it can be re-exported, often with the destination obscured. Everybody is going to be extra cautious this year when it comes to buying sanctioned cargoes, said Umar Nashraf, director of natural gas liquids and Asia oils at FGE Nexant.
Saudi Arabia, the world's biggest oil exporter, is expected to set the March price for its flagship Arab Light crude for Asian buyers at a discount for the first time since December 2020 amid ample supplies, trade sources said this week. The March official selling price for flagship Arab Light crude may decline by 50 to 85 cents a barrel to a discount of 20 to 55 cents below the average of Oman, Dubai quotes. 6 Asia-based refining sources said in a Reuters survey. That would mark a fourth monthly decline, down a premium of 30 cents a barrel for February and the lowest in more than 5 years. Next, we have the top news in metal markets. India plans to soon offer incentives for companies to set up lithium and nickel processing plants to help boost output and meet rising demand for critical minerals, according to 2 sources in a government presentation reviewed by Reuters. India is seeking to accelerate its energy transition and cut emissions by promoting clean energy initiatives like electric vehicles, though it lacks the technology to process critical minerals, a capacity that is largely dominated by China. Nickel and lithium are critical to India's EV supply chain, especially when it comes to batteries, as New Delhi targets 30% electric car penetration and 80% for two-wheelers by 2030 from 4% and 6% at present.
Iron ore futures rose on Thursday after 2 straight sessions of falls, buoyed by expectations of a pickup in China's hot metal output as more steel mills resume production after maintenance. The most traded May iron ore contract on China's Dalian Commodity Exchange climbed 1.78% to 798 yuan and 50 fen, $114.96, a metric ton. China's hot metal output declined 7,000 tons week-on-week as several blast furnaces underwent maintenance, postponing their planned production resumption to next week, the Shanghai metals market said in a note.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures closed at its highest level in 3 months on Thursday, rising for the 4th consecutive session, boosted by firm commodity prices and crude. The benchmark palm oil contract for April delivery on the Bursa Malaysia Derivatives Exchange gained 46 ringgit, or 1.08%, to 4,318 ringgit, $1,100.13, a metric ton. It was the highest close since October 27, 2025. Today's palm market is being supported by firm commodity prices. Crude oil, soy oil at Dalian, a Kuala Lumpur-based trader said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.